Hello dear traders, the new week has kicked off. As usual, we start the day with a video review of the Asian session. Watch it and find out the latest market news. The US dollar regained ground thanks to an upbeat NonFarm Payrolls report. During the week, the US dollar, which gauges the strength of the greenback against a basket of six main rivals, was dropping due to a strong euro. The latter advanced significantly on Thursday amid the ECB's hawkish statements. In total, the US dollar index lost 2% last week. Its decrease was largely due to a disastrous ADP report showing that private payrolls plunged by 301,000. However, the non-farm payrolls figures for January jumped by 467,000. This report significantly exceeded economists' forecasts as well as showed a rise in the previous indicators after the revision. It seems that such a buoyant revival of the labor market has increased investors' fears that the Fed may raise the interest rate in March. This is the only reason why the US dollar has strengthened considerably against its rivals in the shortest period. The US dollar index has approached 95.55. It's likely to keep rising to the upper limit of the 95.20–95.80 range. While major central banks are prone to tighten monetary policy, the Bank of Japan sticks to an ultra-soft stance. How does it impact the yen? It has recently touched the 115.21 level. Its weekly gain totaled more than 0.1%. As the US dollar resumed an upward movement, the dollar-yen pair is likely to grow higher. Yet a new attempt of the pair to break above 117.15 spooks market participants. The previous two attempts, made in the second half of December and on January 27–28, were unsuccessful. Now the pair seems to be gathering strength for a new try. The pair may succeed if it consolidates above the 115.40 mark. Some technical indicators have also entered the positive zone. If the third attempt turns out to be unsuccessful and the price falls below 114.64, the short-term bullish momentum will be finally broken. In this case, the pair may move to the lower border of the channel, namely the 113.32 mark. At the beginning of today's session, the Australian dollar followed its Friday trajectory. At the end of the last week, the Aussie lost 0.9% after the release of a strong US jobs report. After having decreased by 66 pips, the pair halted its decline at the level of 0.7065. On the chart, the Aussie is growing again. It has already reached the level of 0.7104, so the price may even touch the range of 0.7190–0.7227. If this scenario comes true, the price is likely to rise to 0.7291 and higher. Nevertheless, it may also slide down like it was on Friday. Then the price could tumble to the lower limit of the range, which is the 0.6950 level. It's recommended to wait for at least one day until the price direction becomes clearer. The price will either dip below 0.7065 or rise to 0.7190 and further to 0.7227. Technical indicators are moving in the negative zone, which makes the downward scenario more likely. However, consolidation above 0.7090 will help the pair resume an upward movement. This is the main news for today, so have a productive week, and you can also leave your comment down below if you have any questions, and we will try to answer them. See you back soon.